And it's 1:30 p.m. right here in Lagos, Nigeria. Coming up on the program, South Africa extends work permits for Zimbabweans until the end of 2023. And Boat, Uber, and other ride-hailing drivers begin nationwide strike in Nigeria. And Kenya street tax agents are coming as Ruto gets 1.2 billion shillings boost to deploy KRA agents in markets. Hello, welcome to the program. I'm Laddie Williams. Let's check in on the market. Starting on the African continent, we see it's negative sentiment right there at intraday, with the NGX down a big 1.11% there, 55,403 points, lost the 56,000 level for the all-share index. South Africa is also down 0.23%. Other markets we track in North Africa, we see the EGX is the lone gainer there, 0.67%, while Kenya closed down 0.08%, marginal loss for Kenya yesterday. Let's check on in the Middle East now. We see it's flip-flop sentiment we're seeing there in the UAE. Abu Dhabi is up 0.27%, while the Dubai index unchanged, but in positive territory. Look at other parts in the Middle East we track. Saudi Arabia marginally up 0.04%, while the Qatari index there is down 0.38%. Let's head on to Europe now. As the world is trying to move away from fossil fuels, some countries are making more progress than others, including Europe there. Let's talk to Lars Holter right there in Berlin. So, Lars, it seems the UK is pretty far behind renewable energy development. What can you tell us?
Yes, thanks for having me. There is a report out by the Institute for Public Policy Research, and they're looking at the UK's goal to invest massively in wind energy and reach 30 gigawatt in onshore wind energy by 2030. But they say so far it's not looking good. Regulation is very tough in the UK. It takes forever to get a wind park project approved. In the past 8 years, only 15 small wind parks were actually approved and built, and they're producing 0.02% of the energy needed to reach the country's wind energy goals. Yes, that is 2% of 1%. To put this in perspective, would the UK keep going at that rate, they would need 4,700 years to get wind power production to where it should be. And another way to put it, they say between Stonehenge and reaching their own goals, the UK is about halfway there. However, I said this is for onshore, the UK is doing really good in offshore energy production.
And how's Germany doing by comparison?
Well, there's certainly a lot to criticize about Germany too, especially when it comes to onshore wind energy. Regulation is tight here as well, but the country has been much faster in growing its capacities recently. As a matter of fact, Germany is now one of the countries with the strongest wind energy output. In Europe, it's only bested by Denmark, Ireland, and Portugal. However, there's others who are also massively investing. Sweden is readying a more than €2 billion investment in an offshore park that is supposed to bring that country into a leading position in Europe. That, as I said, is of course offshore as well, and that is where most progress is made these days. However, when it comes to onshore production, some countries, and again that includes Germany, could still step up their pace a bit. They've been very slow to allow wind park construction, usually since people don't particularly like them in their neighborhoods.
All right, Lars, but how the market is looking at the topic? Is this a topic where enough money is invested?
Yes, money is certainly not the problem, whether we're looking at offshore or onshore wind farms. Companies are willing to invest. Often, as I pointed out, it's residents that are protesting wind park construction, and that's where change really needs to happen. Now, some energy companies are working on ways to share their profits, not only with their investors in a classic shareholder value model, but actually with those communities that are hosting wind parks, and that could indeed now be a game changer.
All right, thank you so much. That's Lars Holter giving us the details from Europe. Now, I'm taking the conversation further now. Let's head on to the UK. We have Juliana standing by right there. Great to have you, Juliana. So in 2022, we see the UK's space sector added about £7 billion in value to the UK economy. Quite impressive.
Good afternoon, Laddie. That's incredibly impressive, particularly because the UK hasn't always been seen as being a competitor in the very lucrative space industry. But we have been doing our work behind the scenes. In fact, the UK space industry employs nearly 50,000 people. They have been working on certain projects for several years now, including trying to bring data to people in the UK using satellite systems. There has been some ups and downs, of course. Remember earlier this year, the now defunct Virgin Orbit run by the British billionaire Richard Branson failed to take off, which cost the industry a lot of money. So I suppose some of the billions of pounds that they managed to achieve last year, they won't be able to achieve this year, but they're certainly on the way to do so.
And right there, globally now, we're seeing the UK, we're seeing the crypto market right now getting a lot of stiff regulation. Right now in the UK, we're seeing first-time investors in crypto assets will be offered a 24-hour cooling off period. How's this going to work, and what does this cool off period mean?
Yes, crypto, your favourite subject, Laddie. But you're absolutely right. The crypto industry in the UK, as we know, is widely unregulated, and the British government have been trying their utmost to make sure that they try to contain some of the issues, particularly concerning young men who we know have become quite highly addicted to spending lots of their money in crypto. In fact, some MPs have likened it to gambling, and they do want the FCA to clamp down on it, and that's exactly what they're going to be doing. So from October, any crypto company that is advertising to UK consumers must allow this 24-hour cooling off period. So basically what that means is if you are a new time buyer of a crypto asset, you can pay for it, but then you can have some time to think about that choice, that decision, whether or not you could even afford it, and you can withdraw that amount of money within a certain period of time. Also, as part of this new legislation, is that any crypto asset that's saying that if you refer a friend, you'll get a bonus, you won't be allowed to do that too. And again, this is all part of new regulations and new standards that the British government are trying to bring in, because they are worried about the sector, which some MPs have described as the wild, wild west.
Yeah, quite the wild, wild west. And I'm trying to imagine how that cool-off period is going to work. You buy a crypto asset and you see the price plunging. I guess you can say, okay, I'm not buying that anymore. Let me have my money.
I think that's absolutely what you can do. But it's quite interesting, Laddie, because research has been conducted, which is why this report was made by the FCA in the first place. And they have shown that a lot of first-time buyers who've spent all their money in crypto, they do feel remorse and they do feel regret. A lot of them feel shame. We have a huge issue with gambling in this country at the moment, particularly amongst young males. So yes, if you are a first-time buyer, there aren't many, because most people, in fact, I believe they said they did a survey, 1 in 20,000 people in this country owns a crypto asset. But if you are a first-time buyer and you are seeing a Bitcoin plunge, yeah, you can take your money out. Let's see what they come up with. I think we are still very much in a negotiation stage. I think crypto bosses have until, I believe, the middle of August to come back with some of their terms, and then we'll see whether or not it comes into fruition in October.
All right, let's look at other markets now. How are they looking today in the UK?
Yeah, not much has changed since early trade. At intraday, the FTSE All Shares down. It's down by 0.04%. The FTSE 100 down too by 0.04%. And the FTSE 250, the domestic market, that's up slightly by 0.01%. I think the share price in Wizz Air has helped lift that index. In the currencies market, the British pound is currently trading up against the US dollar, up by 0.13%, though down on the euro by 0.06%. But at intraday, the British pound is trading up against the Japanese yen by 0.08%, Laddie.
All right, thank you so much, Juliana. Details there from the UK. Thank you. All right, let's head on to all the markets now to see what's happening in Asia. We see Asia Pacific markets slid as Wall Street saw a pause in its market rally, and the broad market index fluctuated near its highest closing level since August 2022. Investors in the region also further assessed economic data that's been released this week. We see Australia's stocks were down about 0.26%, and we see behind me there it's red. All through that. The Nikkei is down 0.85%. Kospi, 2,610 points, also down 0.18%. And we see HSI index 19,299 points, down 0.25%. So it's red across board as we in the UK. Those Shanghai Composite up 0.49% at 3,213 points. Let's move over to the U.S. now. We see stock futures are flat. Today's investors waited the next market catalyst and digested the recent rally in stocks. Futures linked to the S&P 500. That's marginally down about 0.02%. So we're seeing marginal losses for the futures market. Dow Jones Industrial Average, 33,686 points, down 0.07%. Also marginal loss there. But the NASDAQ, they're just trying to decide whether to be positive or negative. Tech-heavy NASDAQ, 14,330 points, down 0.01%. We see GameStop there. Shares tumbled roughly about 19% after the video game retailer announced CEO Matthew Furlong's firing. Also appointed Ryan Cohen as its executive chairman. We'll definitely be watching out for how the market closes today. Let's head on to the global commodities space. Now we'll see oil steadied today as a tighter supply resulting from Saudi Arabia's pledged production cut and a potential pause to U.S. interest rate hikes have set worries over demand weakness and a global economic slowdown. The OPEC Plus meeting on Sunday, Saudi Arabia said it will cut its crude output by 1 million barrels per day in July, top of a broader deal to limit supply into 2024 as producer group seeks to boost flagging prices. Brent, that fell by 19 cents to $76.77 a barrel. US WTI dipped by 16 cents to $72.37 a barrel. See, the US dollar was slightly weaker today, making oil cheaper for buyers holding other currencies. And straight to the metals market now. We see gold prices edge higher today, supported by a softer dollar, though the bullion hovered near the previous session's lows as investors awaited cues from the U.S. Federal Reserve. Spot gold is up 0.3% at $1,946 per ounce. After shedding 1% in the previous session, U.S. gold futures gained 0.1% to $1,960.70 per ounce. Analysts say gold has support from expectations of the Fed holding rates next week, with prices stuck in the $1,930 and $1,985 range, and the bullion could breach the upper range once the U.S. Central Bank's decision is out. And still ahead, commodities market update is next. Do stay with us. Back to watching Business Incorporated live on Channels Television. Now to our next conversation. We see Nigeria is the world's 5th largest producer of cocoa, and it's recently increased its cocoa production projection for the 2022-23 season to 250,000 metric tons due to improved weather conditions in the southwest region. Meanwhile, the domestic price of cocoa dipped in Ondo and Abia states last week to 1.85 million naira per ton and 1.65 million per ton, respectively. Let's talk to Adeye Adebusina, analyst, financial derivatives company. Great to have you on the show.
Thanks for having me.
So tell me, what's responsible for this recent decline, and what is the outlook for Nigeria's output this season?
First of all, the Cocoa Association of Nigeria initially set its production forecast for the 22-23 season at 235,000 tons. But, due to prolonged favorable weather and the outbreak of the black pod disease, they had to downgrade their forecast multiple times. Heavy rainfall between October to November, followed by dry Harmattan winds at the beginning of the year, greatly stifled crop production. But now, especially in the southwest region, which accounts for over 70% of Nigeria's cocoa production, they have started to see improved rainfall, which has boosted crop outlook. Farmers now expect that the milk crop production will improve significantly from May to June. But however, there are also fears that improved rainfall would lead to insistent rainfall will lead to floods, which would affect crop in the next season.
So I guess we need the rain, but not too much of it. Well, it is alleged that cocoa smuggling has become prevalent in the country as a result of our managed exchange rate. Do you think this would affect Nigeria's fiscal stability? And with the new administration, insisting on a unified market-driven exchange rate, will that, improve the situation?
Smuggling has been a major challenge in Nigeria over the years, and cocoa export smuggling is one of them. And of course, having a multiple exchange rate system encourages export smuggling. For instance, as a small scale cocoa farmer, if I sell my product in the local domestic markets, I sell it at a naira rate or something equivalent to the official exchange rate at 464. Or rather, if it's smuggled out of the country, to a country, for instance, Cameroon or Ghana, and sold at CD or CFA franc, then brought back and exchanged at the parallel market rate of 760, you realize that you earn more money and your income increases. Sometimes it's even seen that the amount at which Nigeria's cocoa exports decline is almost equivalent to the amount at which exports in countries like Ghana, Ivory Coast, and Cameroon increase. So yes, having a multiple exchange rate system encourages export smuggling. Then when there is a unified exchange rate system, there's no room for price disparities, meaning that cocoa exports in Nigeria would increase, boosting fiscal sustainability in the country.
Yeah, we don't need arbitrage at this moment. But Ivory Coast and Ghana, the world's largest cocoa producers, have formed an alliance, as prices, get volatile at this time, just like, we have with OPEC. Do you think this alliance is actually going to be successful?
Yes, in 2019, Ivory Coast and Ghana created the Living Income Differential System, which was aimed at boosting the income of cocoa farmers in the West African region. And the Living Income Differential System ensures that for every ton of cocoa sold, a $400 premium is paid back directly to the farmers, which will increase income. And it cannot be overemphasized, especially with countries like Nigeria and Cameroon seeking to join the cartel, the importance of income and standard of living of cocoa farmers. Because if the income of cocoa farmers increase, there'll be higher investment in the cocoa sector, meaning that agricultural productivity will increase, especially the fact that cocoa is a major agricultural exports in this region of Africa, meaning that it will support economic growth in the countries.
All right, thank you so much. Keep tracking that market. Thank you, Ade Debussy, analyst, financial derivatives company. Thank you. All right, recent development now. South Africa has extended work permits for over 180,000 Zimbabwean nationals until the end of the year. These permits, known as Zimbabwe exemption permits, were set to expire at the end of this month, but have now been extended for another 6 months. South Africa's Home Affairs Minister made the announcement saying that the extension would allow permit holders to apply for other visas and waivers provided for in the Immigration Act, and the new expiration date for the permits is December 31st, 2023. And ride-hailing drivers in Nigeria, including those working for companies like Uber, Bolt, LagRide, and InDriver, have initiated a nationwide strike. The Amalgamated Union of App-Based Transport Workers of Nigeria have instructed drivers to participate in a sit-at-home protest until the ride-hailing companies increase their base fares by 200%. The drivers plan to hold demonstrations at offices of Uber and Bolt in Victoria Island and Lekki, respectively. And the governor of Nasarawa State, Mr. Abdullahi Sule, believes that the fuel subsidy regime has been a fraud that should have been long stopped by successive administrations. He expressed worry on the huge sums of money spent under the last administration of President Muhammadu Buhari and the repairs of the 4 refineries that still never worked. Take a listen.
I have always supported removal of subsidy as a professional, as my background, because I knew there was too much fraud in it. Because the only reason why we are paying subsidy is because we are not refining. Okay? So if we had taken care of our refineries very well, there wouldn't have been this. In the year 2002 or so, we gave 18 licenses, DPR. I was there in Lagos. You know, when we gave 18 licenses for private refineries, not one of them was built. So a lot of things have happened. Government tried this, it didn't work. Tried this, it didn't work. All thinking that if we had done that, all this problem of subsidy will have been over. Look at how much the President Buhari administration spent, you know, on fixing of the refineries. In the 8 years, he spent more money than the 19 billion that Dangote spent in building a refinery that is 1.5 times the size of all our 3 refineries combined. Our 3 refineries in Nigeria today have a total of 450,000 barrels per day. Dangote is 650,000. He spent $19 billion in building it. We spent in maintaining, not building a new one, maintaining these new refineries more than 19 billion in the 8 years. Yet, they have not been maintained.
So is it that government is helpless? They can't arrest them or let them face the music?
No,
defaulters?
No. Okay, let me tell you one of the problems we face at the refineries. The refinery is actually components. Component for water, component for crude, component for this. So you have about 5 or 6 different components that constitute a refinery. The moment the government says we are going to spend $2 billion this year on a refinery. So what the government does, the $2 billion are spent. So as far as President is concerned, we have given the $2 billion. Now, when it goes to the 4 refineries, or the 3 refineries, three effective refineries that we have in Port Harcourt, Wari, and Kaduna, then they say, okay, you now take 700 million, you now take 800 million, you now take that. By the time they take that, it goes to fix maybe, you know, only 1 component out of the 4 components that are all bad. So 0 work is done. These are the true realities of what is happening. And that's why none of the refineries is working.
Yeah, I guess conversations about fuel subsidy and the removal continue to be on the agenda right now. But that's the show today. Thank you so much for watching. Don't forget to join us again tomorrow. My name is Ladi Williams. Bye-bye.